we've had a couple of managers that suffered from dementia, probably many more, but I mean, I'm just a couple known ones actually. And there was one fellow that Charlie and I really loved, and he ran a business for us. Charlie was out in California. Charlie would see him occasionally, and I didn't see him, but everything seemed fine. And then we found out that he'd really been suffering from dementia for quite a while, and he really was a wonderful friend of both of ours. But the business had done fine, so that's become our test. Really, is that for new businesses, we try to find something that a guy with Alzheimer's can run. We have a extreme aversion to incurring any permanent loss with your funds. You know, if I went broke, it wouldn't really make any difference. I mean, I'd keep doing what I do. I'd figure out a way to read a paper and watch a little TV and think about things and talk to Charlie. But the idea of losing permanently other people's money, people who trust us, really, that's just the future I don't want to have. And as Charlie says, all I want to know is where I'll die, so I'll never go there. We spent $40 billion in a hurry there for 3 weeks. We will always have a lot of cash on hand. And when I say cash, I don't mean commercial paper. When 2008 and 2009 financial panic came along, we didn't own anybody's commercial paper. We didn't have money market funds. We have treasury bills. And as I may get into a little later, I'll explain to you why. We believe in having cash, and there have been a few times in history, and will be more times in history where if you don't have it, you don't get to play the next day. I mean, it's just it's like oxygen. Some of our companies have bank lines. I don't know why they have the bank lines. We're better than the banks, and we'll give them the money if they need it. But the local bankers have been calling on them, and they need something to do. Everybody else has bank lines, so it's harmless. But there's no reason for any of our subsidiaries to have bank lines. Berkshire is stronger than the banks. I didn't hear exactly what I don't know whether that was a banker screaming or I don't really like to torture. I don't like to torture anybody. I mean, but and I'm all for banks, and we'll talk about that a little later. There was a note, just a few lines long, from a fellow that was a friend of mine and that worked for Berkshire many years ago. And he said he had now become CEO of Allegheny Corp. I'd been following Allegheny Corp for 60 years. If he hadn't sent me the note, it never would have occurred to me to write him and say, why don't we get together on March 7th or anything of the sort. It just wouldn't have happened, except for the fact that Joe wanted to send me along this annual report that he'd just written. So that's the orderly and decision-making progress. I didn't call up investment bankers and say, will you prepare me a report on this, and what's your advice and all this stuff. I knew we'd buy Allegheny at the price we offered, and if it was of interest to Allegheny, fine. The market, and this is really important to understand, in the last couple of years, the stock market is it's always been a combination of a casino and when I talk about Wall Street, I'm talking about the whole capital formation market. and trading market, et cetera. But the market has been extraordinary. Sometimes it's quite investment oriented, kind of like it always you read about in the books and everything, what capital markets are supposed to do, and you study it in school and all that. And other times it's almost totally a casino, and it's a gambling parlor.
It's almost a mania of speculation that we now have. We have computers with algorithms trading against other computers. We got people that know nothing about stocks being advised by stockbrokers who know even less.
I understand the commission, though.
Yeah, it's just an incredible, crazy situation. And it's weird that we ever got a system where all this equivalent of casino activity is all mixed up with a lot of legitimate long-term investment. I don't think any wise country would have wanted this outcome. Why would you want your country's stocks to trade on a casino basis to people who are just like the people who play craps and roulette in the casino? I think it's crazy, but it happened, and it's respectable. Not with me, but with other people.
My wife, when they got married, we ended up in Las Vegas, but I walked into this casino or a Flamingo. It was kind of a motel-like arrangement, and I was 21 and my bride was 19, and I looked around the room, and there were all of these people, and they were better dressed then. It was a more dignified group than perhaps currently, but they'd flown thousands of miles in some cases. They'd gone to great lengths to come out to do something that was mathematically unintelligent, and they knew it was unintelligent. And I mean, they couldn't do it fast enough in terms of rolling the dice, and trying to determine whether they were hot or whatever they may be. And I looked around at that group. Everybody there knew that they were doing something that was mathematically dumb, and they'd come thousands of miles to do it. And they were, and I said to my wife, I said, I'm going to get rich. Investing is laying out money now with the hope of getting back more later on. It's really laying out purchasing power, not with the hope of getting more purchasing power back. But that's the reason that's the way you learn in the textbooks, that you defer consumption now so you can consume more later on, so that you can take care of your family. All these things about how investment takes place. And that is what happens with farms. I mean, somebody buys a farm, and they hope to leave it to their kids, or they got it from their parents. And I mean, they don't sit there every day and get quotes 15 times a day and say, I'd like to get a call. I'd like to sell a put on the guy's farm next to me, and you can have a call on mine, and then I'll have something called a straddle or a strangle or whatever it may be. And they go about making the farm worth more money, and they do the same thing if they got an auto dealership, and they do the same thing, if they've got an apartment house.
Would you only answer calls from them if you're interested in, or would you proactively approach them?
We tried to stir up interest and all that sort of thing in Berkshire around the world. We probably did that 20 or 25 years ago. We bought 3 German securities, 1 Japan. We would love them to buy it, but they don't think of us as quickly there. I mean, I don't have somebody that's going to send me an email about a company that I've been following for 60 years, and I know I can see him in New York, and I can name a number to him, and if he likes it, he can take it to his board and so on. And it just doesn't happen that way. We'd buy in 10 minutes if we had somebody on the other end that could do business in 10 minutes. I love the operation we bought in Germany. You can read hundreds of thousands, maybe millions of words written on stock repurchases. It's not very complicated. We owned, in 1998, about 150 million shares of American Express. And now we own 20% of American Express. That's what's happened because they've repurchased shares. Now, imagine Imagine if you owned a farm and you had 640 acres and you farmed it every year and you made a little money on it and enjoyed farming, and somehow 20 or so years later it had turned into 1,100 or 1,200 acres. Imagine if you owned a farm and you had 640 acres and you farmed it every year and you made a little money on it and enjoyed farming, and somehow 20 or so years later it had turned into 1,100 or 1,200 acres. And if you do it at the right price, there's nothing better than buying in your own business. I mentioned use Apple as an example of how our interest in Apple, every time a company that earns $100 billion a year, it means that our interest in it goes up 0.1%.
We get all these suggestions from index funds, a letter saying the chairman and the president of the chief executive officer are the same person, and that they have some professor somewhere that thinks that American business would work better if it had a separate, if one could split them in two and have each half work. And to me, it's the most ridiculous criticism I've ever heard. Odysseus would come back from winning the battle in Troy and so forth, and some guy was saying, I don't like the way you were holding your spear when you won that battle. There's some guy that's never run any business and doesn't know anything. I don't think too much of this activity.
We wrote in the annual report, a 9-page report, we said, we're going to treat everybody the same. We really feel that somebody that gave us their savings in 1960 or 1970 or 1980 and just left them with us and trusted us, we feel that they're entitled to the same sort of respect and attention that somebody that is accumulating like crazy assets under management, gets paid based on assets under management, that knows that they just need to have policies that essentially are popular in Washington. The only threat they have really is that Washington sometimes says that you're getting too damn big. We got a letter and says, we would like to meet with you in advance of Berkshire Hathaway's 2022 annual meeting of shareholders to discuss Berkshire Hathaway's perspective on governance and sustainability. They didn't get a special meeting.
When we think of BNSF, we have an exceptional franchise there. We do compete with other railways, and we're very well aware of how they operate. When I think of BNSF, we start with focusing on our customer in an efficient, effective way that delivers great results back to our shareholders. And that will continue to be our focus. I would put our team up right beside them on any operating day. We've got a great leadership team there. We've got a great employee group within BNSF. And what I like is we're just going to see long-term improvement there. We have an exceptional intermodal franchise out of the West. It's incredibly valuable to our shareholders long-term, our partners. And that's what our team is focused on, building that franchise out. So couldn't be more proud of where we're at.
Greg, if we were offered the opportunity, would you trade our operation for theirs?
Never.
Ajit?
The personal automobile insurance business is a very competitive business. Both Geico and Progressive are two very successful competitors. Each one of them have their pluses and minuses. More recently, Progressive has done a much better job than Geico. The biggest culprit, as far as Geico is concerned, is telematics. Progressive has been on the telematics bandwagon for, I don't know, more than 10 years. Geico, until recently, wasn't involved in telematics, and it's been only the last 2 years that they've made a very serious effort in terms of making using telematics for segmentation and for trying to match rate and risk. It'll take a while, but my hope and expectation is that hopefully in the next year or two, Geico will be in a position to catch up with Progressive.
We haven't the faintest idea what the stock market is going to do when it opens on Monday. We never have had. We have never made, Charlie and I don't think, in all the time we've worked together, and I'll tell you something later on maybe about how learning takes place, but we have never, I don't think we've ever made a decision that where either one of us has either said or been thinking we should buy or sell based on what the market is going to do.
No.
Or for that matter, on what the economy is going to do. We don't know. We have not been good at timing. We've been reasonably good at figuring out when we were getting enough for our money. And we had no idea when we bought anything. Well, we always hoped it would go down for a while so we could buy more. And we hoped even after we were done buying and ran out of money that if it was cheap, the company would keep buying and in fact taking our interest up. I mean, that's stuff you could learn it in fourth grade. But it's not what's taught in school. And, I mean, so never give us any credit. Well, actually, give us all the credit. I mean, go on and tell everybody how smart we are, but we aren't. We haven't ever timed anything. We've never figured out insights into the economy. If the Harvard endowment had come to see me, or General Motors pension fund or something, and they said, well, no, but we have to have a balance, and we have to maybe have 60%. And then we have to sit around every 3 months and listen to a bunch of managers. They'd have just done better if they'd just taken some darts and thrown them. And it's amazing how hard people make what a simple game it is. But of course, if they told everybody what a simple game it was, then 90% of the income or more of the people that were speaking would disappear. So it's really a little too much of us to expect of human nature that people will explain why they really aren't adding any value to what you can do by yourself. But you can't have monkeys throwing darts at the page and take away the management fees and everything. I'll bet on the monkeys. Capitalism is very, very, very peculiar in how it dishes out rewards. For a while, it was better to be in Wall Street than be at 220 or 230 hit here in the bigs. It is now reversed because of the development of TV, etc. Charlie, is there any way you'd like to close the sermon?
Well, I do think we have a very interesting phenomenon I would argue that in a lot of the wealth advisory business, people are charging for skill and delivering closet indexation. In other words, nobody can stand being that different from the crowd in results. They're afraid they'll lose their fees, so everybody does the same thing. It's mildly ridiculous.
Before we were married, we tried to convince a couple of young women that we were really more attractive than we were. You can't expect people not to behave in their self-interest, and that was very important. That we didn't disclose all of our weaknesses before the marriage. So,
Warren, we're trying to be a little better.
Yeah,
we may fail a little, and I don't know about you, but I've slightly improved since I was 17.
Yeah. Well, that's a really interesting point. You ought to be a better person in the second half of your life than the first half. We have had enough sense to figure out, we figured out what makes us happy, and we've gotten somewhat more sensitive to what can make other people unhappy. I'd rather be judged by the second half of my life than the first half. And so would Charlie.
Yeah, of course.
If fortune has just showered you with all kinds of good things, you ought to be a better person in the second half of your life than the first half. Why not have the second half of your life be better than the first half? Both Charlie and I have had the luxury of living a long time, so we get to play what we would regard as the the hopeful and respectable second half. And we have had enough sense to figure out, well, we figured out what makes us happy, and we've gotten somewhat more sensitive to what can make other people unhappy and all that sort of thing. And I'd rather be judged by the second half of my life than the first half. And so would Charlie.
Yeah, of course.
Okay.
I don't even look at what I did when I was young because it would embarrass me.
Yeah. There is a risk every day. If you just keep rolling the dice, everything will happen. 330 million Americans out tomorrow. Every American says heads or tails. And they do it every day. After 10 days, you've got 330,000 of them that have called the flip 10 times in a row. And if you do it 10 more days, you've still got a bunch of people who've done it 20 times in a row. And they really think they have learned how to control the flip. Well, the answer is the world is flipping a coin every day as to whether people who can literally destroy the planet as we know it, will do it. And unfortunately, the major problem is with people that have large stocks of nuclear weapons, ICBMs. They talk about using tactile nuclear weapons because somebody will be upset because they're losing a war. Somebody's willing to kill hundreds of thousands of people with tactile weapons. I mean, why do they stop? But if they're, it is a very, 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 very dangerous world, and
we don't have any way of protecting
There's no way
against a big nuclear attack. I know a man who said, "I know what I'm going to do if there's a nuclear war. I'm going to crawl under the table and kiss my ass goodbye."
Well, yeah, and Charlie is in charge of loss control at Berkshire. We have no solution for it.
No, we don't.
There's certain things we don't write policies on because we wouldn't be able to make good on them anyway. And everybody would know we wouldn't be able to make good on them. But did you ever get any questions in terms of?
In addition to all what Warren has said in terms of the chance of something like this happening, the additional thing that concerns me about a nuclear situation is my lack of ability to really estimate what our real exposure is in the event of a nuclear event. When you're talking about other big exposures we have, earthquake and hurricane and cyber, I can, with some reasonable degree of accuracy, have a point of view in terms of how large our exposures can be and how big our loss can be. When it comes to a nuclear thing, I sort of surrender. It's very difficult for us to estimate how bad can be. Very many different lines of exposure.
Well, I'll tell you something even better than that one stock. The best thing you can do is to be exceptionally good at something. If you're the best doctor in town, if you're the best lawyer in town, if you're the best whatever it may be, no matter whether people are paying you with $1 zillion, they're going to give you some of what they produce in exchange for what you deliver. If you've got it, and if you're the one they pick out to do any particular activity, sing or play baseball or be their lawyer, whatever it may be, whatever abilities you have can't be taken away from you. They can't actually be inflated away from you. Somebody else will give you some of the wheat they produce or the cotton or whatever it may be, and they will trade you for the skill you have. So the best investment by far is anything that develops yourself. And again, not tax. That's what I would do.
For the past 4 consecutive months, we've been going through inflation with an inflation rate north of 7% for the first time since 1982. If you had to pick one stock to bet on.
You kind of snuck up on us there for a second.
And be resilient in the inflation, which would you choose? And what specifically enables that stock to do very well and might very likely be a difficult market?
I got some advice for you too. When you have your own retirement account and your friendly advisor suggests you put all the money into Bitcoin, just say no.
Yeah. Figure out what you'd like to be. What you'd like to be is what you're going to likely be good at it. The world will always need somebody on that tube to tell us what's going on. So study Becky Quick or somebody and figure out, what makes her good and what you sort of naturally bring to the game. Who's the guy that says you got to spend 10,000 hours doing this or that? And then Malcolm Gladwell, would say just spend 10,000 hours on something. Well, I could have spent 10,000 hours trying to become a heavyweight boxer, but I don't think I'd have felt very good at the end of the 10,000 hours. You stumble in to what you really like doing, what you're good at, what is useful to society, and then it doesn't make any difference whether the dollar bill is now worth, in terms of the purchasing power, a cent or a half a cent or a hundredth of a cent. Berkshire is built forever. There is no finish point. Nobody is waiting to retire or have their options vested or thinking about, could I take another job? They're doing what they want to do in life. I don't know whether we could build it again, but we've got it. And we didn't know we were building it exactly when we took over. When we had a lousy textile mill. I mean, it isn't like Charlie and I sat down. He didn't happen to be in Berkshire, but he was my partner and everything. And so we were mental partners. We didn't sit down and work out some plan that said, well, we'll run the dumb textile business for 20 years and then we'll finally have to fold it. Or then we'll do this and that and everything. We just kept putting one foot in front of the other. But we did know how we felt about running a public company. And one thing we wanted to do always was we wanted to have people that were in sync with us. The future for a long time is about as assured as you can have in the world. We have a culture that A, has worked, B, has the shares and the shareholders that will carry it a long way. And you've got a board of directors that understands that our culture is 99.9% of running the business. We are a business that exists for people that trust us. And all we have to do to fulfill that trust is fairly simple things. We've got the people to do it. We've got unbelievable resources to do it. And it isn't that difficult as long as you've got the freedom, essentially, to do it. We do have what we think is a special relationship with our owners. If we have the same culture, we'll be here 100 years from now. We wanted people who trusted us. And we started, in my case, in a partnership, we started with 7. So I handed them a little sheet of paper, and it said the ground rules. I wanted to be sure we were on the same page. I said, you don't have to read the partnership agreement. I mean, there's no way in the world I would be taking advantage of it. You shouldn't be here if you think I'd take. I do want you to be on the same page and measuring me by the same yardsticks I measure myself. Those people stayed with me. Their children, their children's children, they're shareholders of Berkshire, but they're partners. And it'd be hard to do that again, but I would do it with whatever. If I were going to be in this field, I would try and do the same thing. I would try to find people that trusted me. I finally found a way to get a few people. I mean, I didn't actually stumble into it, but a few people that trusted me, and they just gave me their money.
I remember when you had a textile mill,
God.
and
I tried to forget it.
The textiles aren't really just congealed electricity the way modern technology works. And the TVA rates were 60% lower than the rates in New England. It was an absolutely hopeless hand, and you had the sense to fold it.
25 years later.
Well, you didn't pour more money into it.
No, that's right.
Recognizing reality when it's really awful and taking appropriate action just involves often just the most elementary good sense. How in the hell can you run a textile mill in New England when your competitors are paying way lower power rates?
We figured it out, finally, and
We reversed course.
yeah. But why the hell did we do it in the first place?
Well, because we were stupid.
Yeah, okay, well, you just keep going.
And keep learning, that's the
Keep
secret.
learning. I picked up a book. I saw one paragraph, and it told me I'd been doing everything wrong. You know, now if you look at that, some people will see two faces. Some people will see a base. And some people will look a long time and only see two faces. They call it ambiguous illusions or something of the sort. There's other things that talk about aha moments. And if you're looking at it from one side, it looks like a rabbit, and if you look the other way, it looks like you're looking at a duck. And the mind is a very funny place, and I think people call it an apperceptive mass. Whether you call it a light bulb, whether you call it, a moment of truth, and that happened to me in Lincoln. I mean, it changed my life. Optical illusions.
Well, I know that that's the way the brain works, and that it's easy to get it wrong. And part of the trick is to get so you correct your own mistakes. And we've done a lot of that.
Yeah.
Frequently, way too late.
Yeah, we've done better with the mistakes than we have with the reasonably good ideas.
Well, it's so easy to overdo a good idea. That's what's going on now. You have a lot of good ideas that are being grossly overdone.
Well, just tell me about one that hasn't been, but tell me later when the crowd isn't listening.
But look what happened to Robin Hood, from its peak to its trough. Wasn't that pretty obvious that something like that was going to happen? Robin Hood, when it came out and it went public and it got alerted everybody in all the short-term gambling and big commissions and hidden kickbacks and so on and so on. It was disgusting.
Yeah. And it said so last year, and they got mad at you, and they sold a bunch of their stock, and they got the money, and
Yeah, but now it's unraveling. God is getting just.
but a lot of the insiders have they've gotten a lot of money from it. I mean, they were big sellers, as I remember.
That may be, but
Yeah.
there's been some justice.
Well, I have to agree with that. Whether it's a good idea to go around making enemies of people, though, is it wise to criticize people at all?
Probably not, but I can't help it.
At one point, I said, I don't put my citizenship in a blind trust when I take the job as CEO of Berkshire. But I've also learned that you can make a whole lot more people sustainably mad than you can make temporarily happy by speaking on any subject. And on certain subjects, they will take it out on our companies. And that means that the people that are employed by us, some of them we would end up letting go. It means that the shareholders get hurt. And do I really think that it's so important that I talk on every possible subject that people can get very upset about, whether they should be asked to pay that price? And I've come to the conclusion the answer is no. They may have campaigns against their companies. It applies to me. I'm not going to go around and take positions where instead of saying Warren Buffett says, it will say, Berkshire Hathaway or Warren Buffett of Berkshire Hathaway. I do not want to make the lives of you and I just decided I'm not going to be doing that. And if I want to do that, I should quit my job. But citizenship, speaking out, is that important? I'll give up what I love the most, which is having this job. I don't want to do that. Charlie, how do you feel about that?
Well, I, even more than you, I have to be very careful about what I say.
Now, Charlie?
I tend to stay out of the income tax things like this. My policy is I pay whatever taxes they pass, and I don't want to engage in lobbying about taxes.
Yeah. And I would add one thing. Lobbying is really distasteful. I once did it for a candidate, and I ended up in a room with a bunch of lobbyists for cigarette companies. They didn't care about Nebraska. They didn't care about it. They didn't have anything. They were there because they were handing over a contribution. They didn't, and I was a convenient accessory. And you know, it made you want to throw up. We operate in the railroad business, the energy business, insurance business, and they're extensively regulated. I don't also want to be the only railroad that stays out of the railroad group, the only insurance company that stays out of the insurance group. Other people can rightly figure that we're a free rider under those circumstances. So I tell the managers generally, don't spend Berkshire's money on candidates that you like. Don't pressure suppliers to do it. I mean, Berkshire is not a weapon to use, and it's been used by certain people in the organization, but don't use it to muscle money out of anybody else for who you like or what school your wife went to or whatever it may be. And some of it goes on anyway, but I don't tell our people that don't belong to any trade associations. Charlie wrote one of the great letters of all time. We resigned from the U.S. Savings and Loan League. We warned them. We said, we just cannot stand, what you're doing to the country. And we warned them, and finally Charlie wrote a letter, which is, like I say, available on search. And it's should be one of the proudest letters, certainly one of the proudest letters that's ever come out of Berkshire. And he just said, we can't stand it anymore, and we're resigning. And but that's a very tough thing to do. You can't. It's a tough way to live. Just go around criticizing the people you work with, and the neighbors, and they're perfectly decent people, but they run into institutions that are doing things that are very distasteful to them, and we support some of our subsidiaries in energy. I don't want to find people who are doing it for personal reasons.
My question is how to practice the multidisciplinary framework in making investment decisions and in life. Like how to make it more practical.
Charlie?
Well, obviously, it helps you to know more than one discipline. There's an old saying, that a man who carries only a hammer thinks everything else is a nail. And you make a lot of wrong decisions if you don't have some command of all the disciplines. That's all I ever said. But you do irritate people terribly when you come into their territory. You say, I'm multidisciplinary, you're the expert, and I know better than you. They hate you for it. I can attest to it. I've done it several times.
Bonds can swindle the equity investor too. Everything, inflation, I should say, swindles the bond investor too, and it swindles the person who keeps their cash under their mattress. It swindles almost everybody. I wrote that story for Fortune. It was about 7,000 words, and Fortune didn't like publishing 7,000 words, and they had my friend Carol Loomis explain that to me. I said, every word is precious, and they can either run it or not. Then I sent it was beginning to bother me a little, so I sent it to my friend Meg Greenfield, and Meg was a great, great, great editor at the Washington Post, and we were very, very good friends. Wonderful woman. And Meg who was tough as nails with most writers, but she was kind of nice. She didn't want to really hurt me too much. So I said, well, May, what do you think? And she said, well, Warren, she says, you don't have to tell everything you know in this article. It made the point. And so I'd write that letter, I'd write that article shorter, and but I'd say more or less the same thing. Fortunately, we have it. And we know more about how to keep it than to institute one. And it's very interesting. We have 1,470,000 Class A shares outstanding today. That's fewer than we had a year ago. Those seats are filled. The shareholders are in place. We like the group we have. So why in the world, when we got a fixed number of seats, should we go out and recruit other people to replace you? The ideal shareholder is the group. If we had a church, we'd want the people to keep coming back week after week after week. If we had a limited number of seats and we had some wonderful parishioners, and we would not go out and recruit another 50 or 100 of them and have to throw out 50 or 100 of the ones we already have. Every company I know virtually is wooing new people to come in, and whether they're improving the group they get or not, it strikes us as basically crazy. Charlie, tell them about it.
Well, I think Berkshire's culture is going to last a long time after we're gone. And I think it should, and I think it'll prosper pretty well. The rest of corporate America is quite different. And it gets more different, I think, with each passing decade. And it's getting very peculiar. Pretty soon they're going to hold all the shareholders' meetings online, and the shareholders won't even come. And it's getting very peculiar, and the index funds get more and more important in the voting. And it's like everything else in life. It changes, and not always in ways you like.
Do Warren or Charlie see any benefit or logic to a rule that would prohibit passive investment vehicle managers from voting the shares they control for their passive investment clients?
Well, I'll take that. I think the guy's right. I think the thing is out of control and counterproductive. And I don't think it's good for the country to have 3 passive investors with bright young men from Harvard or what else, telling them what proper governance of corporations is. It's not a good development. And it is, and I think indexing, if it gets to 90%, then it won't work very well at all. But at the moment, it's worked fine.
Berkshire Hathaway Energy actually is required with its regulated utilities. It's required in different ways by different states and by different regulatory authorities to have a large amount of debt, because the regulatory authorities will say you can get debt money cheaper than you can get equity money, which historically has largely been, almost always been true. They say that since we're going to allow you a return on equity, we'll say, just pick a figure, but let's say they allow us a return on equity of 9%, and we can borrow a lot of capital at 3%, they say it'll result in higher rates to customers if you use it, put in all equity. We would love to have all equity in our utilities, but the regulator wouldn't stand for it, because it would result in, under the traditional system, it would result in higher prices to consumers.
It's different. It's a long way away, and they've got their own culture and their own loyalties and so on and so on. And the reason that I invested in China is I could get so much better companies at so much lower prices, and I was willing to take a little political risk to get into the better companies at the lower prices. Other people might reach the opposite conclusion, and everybody is more worried about China now than they were 2 or 3 years ago. So that's just the way it is.
I have nothing to add. The answer to your question is we wouldn't be in the business unless it was my judgment that the weighted probabilities are higher, that the float will be useful to us rather than costly to us. And nobody will know the answer to that for a very long time. So far, so good. But it is a judgment, and absolutely I could be wrong about it. I think both Charlie and I would say that we think the odds are that it's a winning bet, and the odds are pretty good, and that we're quite well positioned to do it if anybody does it. Did we know 9/11 was coming? It is not a sure thing.
Just think of what the potential is, though, when you're reviewing it. If we could buy common stocks we were virtually sure would give us 8% after taxes with our whole float, that would be a hell of a lot of money. And the float has been growing, so relax. We're glad to have the float. We really like our float. We love it. The relative absence of bureaucracy at Berkshire
Unbelievable.
has made the company a lot of extra money for a very, very long time.
And it's made my life happier.
And yes, but that's ideal.
Berkshire, in a crazy way, I look at Berkshire as a painting, and it's unlimited in size. It's got an ever-expanding canvas, and I get to paint what I want. And if somebody wants to paint something else, then I'll go someplace, and I'll get a smaller little thing, and I'll paint away. I actually, I'm no good. I don't know anything about paintings. Take me to an art museum, and all I really want to know is where the men's room is. But I'm just not interested. And other people look at paintings, and they see something, and then they see something additionally later on. And I mean, they really have a different sort of perception ability in relation to that. And to me, Berkshire's a painting, and I get to paint. And the object, obviously, I want my partners to come out well in them, but the real thing I like is the painting. What you do yourself, you develop skills that people are willing to pay for in the future, regardless of what the unit of exchange is. In terms of inflation in our own businesses, it's extraordinary how much we've seen. Eventually, if you get a lot of money in people's hands and you don't have very many goods, prices go up. Of course, inflation is never the same. Nothing in economics is the same the second time after it happens than the first, because the first affects people's attitudes in the second, and their attitudes always influence the activity itself. I mean, it is an interesting phenomenon. People write a textbook, and they write it based on the last experience, and people read the textbook so they behave differently next time, and then they wonder why they're getting a different result. We are seeing an unleashing of the fact that we've just mailed a lot of money to people, one way or another. It's very indirect, and it all gets complicated when we talk about a big system, but this is what's happened. And I will guarantee you that if we mail out $1 million to every household in the United States tonight, and you don't know that it's happened, you don't really expect much to happen in behavior tomorrow, but somehow at some point, and then if you start doing it every month, we'll say, and people really know you're doing it, then they start anticipating it and buying ahead of time and forward. I mean, there's a million things that happen in economics, but the answer is we've had a lot of inflation, and it was almost impossible not to have if you're going to mail out the country. That's everything I know about economics and more, and Charlie can probably improve on it.
Well, it happened on a scale this time we'd never seen before. Those checks that were just mailed out to everybody who claimed to have a business and claimed to have employees, they probably drowned the country in money for a while. Well, the really interesting company is Japan, where first they buy back all the debt, then they start buying back all the common stocks. Now that's really weird. And what did they get? 25 years of stasis. Who would have predicted that?
Well, nobody predicted anything. I mean, there's nobody's predictions that we're interested in, including our own. I mean, it's very simple. No, it's an impossible problem because, first of all, you have to decide what gap is supposed to reflect, and it doesn't reflect value. But in certain cases, of course, it is important to say that this is value and so on. I mean, it's a convention, and it is done so that the auditor generally is protected, because otherwise everybody sues everybody in this country for anything. And it's designed to cause people who want to report a given amount of whatever is desired by the market to largely be able to do it. I don't know how I would write the rules. I said to Charlie, these things are going for $1 million or $2 million. Charlie said, Warren, it's very simple. Pick out 10 prestigious investment banks and do exactly what I say. Put them in order, 1 through 10. And he said, call the guy at the top of the list and tell him you'll pay him $60,000. We're doing a fairness opinion. And you know that it's an insulting price if they're insulted by it, which they probably should be. And then you'll go to number 2. And they'll offer them the same deal. And you'll just keep going down till you get to number 10. And if you don't have anybody by number 10, you'll come back to number 1 again. And you'll say, well, I'll pay $80,000. So I picked 10 names out. And number 1 name was Jack Shatt. But I said, Jack, here's our procedure. And Jack said, don't worry about it, Warren. I can take care of that. He says, we're in. And so we got a fairness opinion. There's all kinds of people watching this that are long Bitcoin, and there's nobody that's short. Nobody wants their windpipe stepped on. And I don't blame them. I don't like people who step on my windpipe. But I would say this, that if the people in this room owned all of the farmland in the United States, and you offered me a 1% interest in it, and you said, pay our group $25 billion, I'll write you a check. Now, if you told me you owned all of the Bitcoin in the world, and you offered it to me for $25, I wouldn't take it, because what would I do with it? I have to sell it back to you one way or another. I mean, they have the same people, but it isn't going to do anything. The apartments are going to produce rental, and the farms are going to produce food. It explains the difference between productive assets and something that depends on the next guy paying you more than the last guy. Certain things have value that don't produce something tangible. I mean, you can say a great painting, probably will have some value 500 years from now. May not, but the odds are pretty good that if it was a big enough name, at some point, there will be a few things. I mean, you can find something. If somebody wants to sell you a pyramid or something, and you can charge the viewers, or it'll be around a long time and won't produce anything. But people will find it interesting to go there because I've read about the pyramids. But basically, assets to have value, they have to deliver something to somebody. And people have attached magics to lots of things. I mean, the gold on Wall Street, create magic. We are not an insurance company. We're a tech company. Well, they're an insurance company, but a dozen people or so have raised a lot of money. They just say, just don't pay any attention to the fact that we sell insurance. We are a tech company. Well, in the end, they wrote insurance, and overwhelmingly, they've lost a lot of money since then. You can make up things that work well in getting money from other people.
Well, I have a slightly different way of looking at it. In my life, I try and avoid things that are stupid and evil and make me look bad in comparison with somebody else. And Bitcoin does all three. And in the first place, it's stupid because it's very likely to go to zero. The second place is evil because it undermines the Federal Reserve System and the national currency system, which we desperately need to maintain its integrity and government control and so on. And third, it makes us look foolish compared to the communist leader in China. He was smart enough to ban Bitcoin in China. And with all of our presumed advantages of civilization, we are a lot dumber than the communist leader in China.
The one development that I really do think is actually important, but I don't know any way to do anything about it. My general sense, and there's no way to prove it, but I essentially believe people are now behaving somewhat more tribal than they have for a long time. People are always going to be partisan, and they're going to have religious beliefs. They're going to have all kinds of things, but it gets pretty tribal. But it can get very dangerous when one group of people say 2 + 2 is 5, and another say it's 2 + 2 is 3, and they're going to give you those answers if you call them. I don't think it's a good development for society generally when people get tribal, regardless. I mean, I was very, very lucky in that I found what I wanted to do because my dad happened to be in a business that he wasn't interested in, but they had some books down there, and I loved my dad, and I'd go down and read the books, and they interested me. And, I'm glad he wasn't a professional boxer or something, or I wouldn't have any teeth left, or it was accident, just totally accident. But I do think you know it when you see it, and it doesn't mean you can follow. I would tell the students, wrote in the report, find out what you love doing it. You spend most of your life doing it. Why in the world would you want to be around for a lifetime working with people that you didn't like unless you had to, which sometimes happens? Just work for whomever you admire the most. And I gave the talk at Stanford one time, and somebody showed up at Tom Murphy's office, I think, a couple of days later. That person was right. And of course, it's what I did when I got out of school. I wanted to work for Ben Graham. I didn't care what I got paid. I just knew that that's what I wanted to do. And then I pestered him for 3 years, and he finally hired me. And then I found somebody else that I'd even rather work for than Ben, who happened to be myself. So I've been working for myself ever since. But I had about 4 bosses in my life. On the Lincoln Journal, the name slips my mind at the moment, he's a wonderful boss. It was Cooper Smith at J.C. Penney's here in Omaha, and they all were wonderful people. But I still preferred working for myself. Charlie and I both worked for my grandfather, and we didn't find it that interesting. I don't remember why'd you ever decide to go to work at the store, Charlie? Charlie worked there in 1940.
I worked just for the experience of working. I didn't need the money. My father gave me an ample allowance, and I also had a private business. So I was kind of working as a lark in your grocery store.
12 hours a day?
Yes.
For a lark?
Yeah, as a lark, yes.
Do you consider that a good investment of your time? I'm looking back on it.
Well, I'd never done it before, and I wanted to have a little of that experience, and I wasn't going to do it very long.
That sure as hell wasn't the reason I worked.
Well, I could give that young lady the advice, figure out what you're bad at and avoid all of it.
Yeah.
That's the way Warren and I found our profession.
Absolutely. We
failed at everything else.
We worked at everything till we found the ideal employers ourselves. And that was something we really admired.
Yeah, I know. Warren said work for somebody you admire. The only one he knew was the one who was shaving.
Self-employed.
You see when he was shaving.
But it isn't bad advice. It isn't bad advice. Who wants this? If they've got an option. If you're, Charlie went into the service in whatever year it was in the 40s, and he didn't really have a choice of who he was going to work for. And as I remember, it didn't really work out that well who you worked for, Charlie, did it?
Well, if you stop to think about it, the two things that neither one of us has ever succeeded at. One, we've never succeeded at anything that didn't interest us, right?
Right.
And we've never succeeded at anything that was really hard where we didn't have much aptitude for it. Yeah,
and we've been doing whatever we please for 60 years now. And we get, we have fun in our way. And
I'm just amazed. You'd think if you're smart, you could do things that don't interest you well, but you can't.
well, I've certainly got a lot of examples in my own case, but we won't get into them here. Charlie's the expert on oil.
Well, that
Only compared to me.
Samuel Johnson said it's hard to determine the order of precedency between a louse and a flea. It's hard to tell which of us is more incompetent in oil.
Yeah, we're still competing.
I have a different view on this subject. I like having big reserves of oil. If I were running the benevolent despot of the United States, I would just leave most of the oil we have here, and I'd pay whatever the Arabs charge for their oil, and I'd pay it cheerfully and conserve my own. I think it's going to be very precious stuff over the next 200 years. Nobody else has my view, so it doesn't bother me. I just think they're all wrong.
Yeah. Well,
but at any rate, that is not the normal view.
it wasn't that long ago that, the idea that anybody produced a barrel of oil was somehow something terrible. Everybody has a feeling on immediately. And this gets into a whole bunch of different tribes of sorts, and you offend an awful lot of people if you talk in any way about it.
If you stop to think about it, the oil industry is being so vilified now. I can hardly think of a more useful industry. I don't know about wildcatters, but certainly the petroleum engineers I know, and the people who design our oil refineries and pipelines are some of the finest and most reliable people I know. And I see very little trouble with the oil supply thing in the United States. So I'm basically in love with Standard Oil. And I don't have this feeling that it's an evil, crazy place. I wish the rest of the world worked as well as our big oil companies.
We haven't bought any stock in April. It's something that when we can do it, and we know, at least we think the probabilities are very high. We certainly believe it in terms of our own evaluation and our own investment. If we think that we're improving things for the remaining shareholders, we'll buy it back. And if we don't buy it back. If we have the choice of buying businesses that we like or buying back stock, controlling factors how much money we have, we'd rather buy businesses. We do feel an obligation to do things that we think are intelligent and in no way risk, absolutely no way present any risk of financial problems under any circumstances we can envision, except maybe something like nuclear war.
Warren, we'd be crazy if we didn't rather enjoy having come a considerable distance from small beginnings. And to do that in good company, it's a favored life.
Yeah.
We've been very fortunate.
Yeah. And tomorrow, well, my guess is that the board, it's just, they respond as people do. They'll put some more restrictions, or they'll have some more consultation on a lot of matters or some matters, than they do with me. I mean, they won't need to, but they'll feel that they haven't had the experience, they haven't seen them as long, and then a whole bunch of things, and they'll feel that the Delaware laws protects them better. And incidentally, they don't have directors and officers liability insurance. I mean, virtually every company on the New York Stock Exchange has it, and we just don't buy it. I mean, come on the board and you're a trustee for a whole bunch of people that trust you and me. I'm talking about the directors and me. It's very interesting. People go on museum boards and they're expected to contribute. People go on college boards and they're expected to contribute money. They say it's a great honor to be on a university board or museum board or whatever. It's a great honor, and therefore you should raise money for us. Frankly, I think our board's more interesting than being on a university board or a hospital board or something. I wouldn't know what they were talking about anyway, and on museum board or art board. But people have found that they can make $300,000 a year, which is enormously important to some people and is meaningless to others. Chances are, if somehow they'd arranged it so that directors didn't get paid at all, there'd be plenty of people who wanted to be directors. That would be a prestigious sort of thing and all that. But in effect, it's money. The whole idea of the independent director, frankly, it just doesn't really make any sense.
You don't think a director is independent who needs $300,000?
He needs the money, yeah.
He's independent the way a slave is independent.
The idea that somebody, it's an important part of their income. I mean, what they want, they may want to do a lot of other good things. It doesn't mean they're terrible people. But if the difference is whether you, how you live, and in this case, whether the person might go broke, how in the world you can call somebody like that independent? It's just ridiculous. But it's the way the rules are, and we follow the rules. But
Well, they don't want them just independent now. They want one horse, one rabbit, one cow, one whatever.
you know, I mean, I feel like Galileo.
Independence is not enough. You got to have a very diverse kind of independence.
Yeah,